Folks, this is an emergency message. If you're a stockholder, investor, trader, or even just a conscientious observer, you need to be watching this video. Markets are chaotic. Emotions are running high as hell, and when emotions are high, people make rash decisions they regret massively. When the masses are making decisions based on feelings instead of data, that's when the biggest opportunities pop up for the smart money who are actually paying attention. Listen up. It's incredibly important to be calm and strategic right now. This period is what's going to set you up for rapid growth over the next 6 to 12 months. In today's video, we're going to break down why the markets are dumping, bubble concerns, the truth behind that shady circular chart, the Fed factor, how the market is being guided down by the Federal Reserve, the playbook, a clear, concrete strategy to use this time to come out on top in the long run. The only thing I ask is that you smash that like button and subscribe. Share this on X or Reddit. This is a message a lot of people need to hear right now. The market is continuing to dump. The Fear and Greed Index just hit 8, its lowest level since the April 2025 bottom. That's sheer panic. This dump feels even more painful because a lot of the high-flying tech and AI names are getting smoked faster than ever before. We've just seen chopped November follow a beautiful October. Many folks were hoping the Nvidia earnings release would bail out the markets. Nvidia released an insane beat on earnings, and for a few hours, the markets were saved. Then, boom, Nvidia got beat down and the overall markets got hammered. Nvidia's stock whipsawed from plus $450 billion to minus $450 billion in market cap in a single session. What does that tell the market? It tells you. It doesn't matter what your company does right now. It's going to get beat down because that's the condition we're in. It's a liquidity event, not a fundamental one. Here on Grow Wealth Together, we are always cautious bulls. We know there will be dips, corrections, and crashes. But long-term, well-run companies that are creating real value will shine through. Sell-offs are normal, and they are a critical part of routine trading. We skipped the August, September, and October sell-offs, and now we're getting a November sell-off, the worst November trading in 17 years. We love to see testing because it helps the market sustain its overall bull trend, and it allows for good entry prices. This is healthy. Every time I open up X or Reddit, I'm seeing this circular financing chart, and the bears are screaming that AI is a massive Ponzi scheme and a bubble. They're dead wrong. So let's kill this myth with a very simple analogy. Imagine a city growing at a once-in-a-generation pace. New tenant demand. People flood the city for jobs and opportunity. AI demand. Real usage equals real demand. Developers borrow to build. Banks are happy to lend because they see the proof of concept. AI infrastructure. Cloud providers raise capital to build data centers. Developers order materials. They order lumber, steel, and concrete. AI build-out. Cloud companies place massive GPU orders. Construction is built. Apartments, stores, schools, and hospitals are built. AI ecosystem. Companies build out model training and inference. Analogy. Conclusion. Every step in this new city is driven by real tenants, real demand, and real economic output, not speculative BS. This is exactly the same as real AI workloads justifying the GPU purchases. A healthy expansion cycle is where real revenue justifies the upstream expansion. A bubble is when you build empty buildings hoping someone someday will move in. Today's AI world is building apartments that are fully leased before construction even finishes. New investors are always shocked by the sheer absolute power the Fed has. One statement from them, and the market turns on a dime. If the Fed says, "We're going to skip one cut," a lot of people will capitulate. We just got the minutes from October's meeting, and the message is clear. Many officials did not think the central bank should lower interest rates in December. They are putting on the brakes. The December rate cut was priced in. And now that it's increasingly likely to be skipped, a lot of folks are selling to pre-factor in that risk. But bigger picture, this is an arbitrage opportunity. Short-term Fed goal. No December cut. Markets go down. Medium-term Fed goal. Over the next 6 to 18 months, they are going to cut rates. You are in a period of cutting, not prolonged pausing. That is a fact. Considering the upcoming election and the potential change in the Fed chairperson, it's hard to imagine we don't end up at much lower rates by the end of next year. As the Fed teases skipping this December cut, it's creating an arbitrage opportunity for those looking past the next 3 months. This is a gift. Okay, great. So, what do we actually do to protect our gains and set ourselves up to win big? Let's break down the play. 1. Focus on high conviction, not headlines. O, accept the facts. We are in a powerful AI-driven bull market. You can't predict which sell-off is the big one. Stop the BS. Don't abandon your goals every time the media says a bubble has popped. O, your check. Focus only on stocks with a competitive moat, long-term proof of concept, and undeniable leadership. Buy the best, forget the rest. 2. Build emotional control. This gets so many people. O, limit checking. Obsessing over your positions minute by minute is a rookie mistake. Limit checking apps and news. O, be a boss. Treat your portfolio like a business. Keep a journal of your plans and stick the hell to them. 3. Keep dry powder on the sidelines are the crash shield. Keep 10% to 20% in cash or ultra-safe assets like T-bills. This is your dry powder and your ultimate protection. O, the rule. Always invest a set amount every month, rain or shine, DCA. Only deploy extra firepower when markets or conviction stocks are 20% plus off recent highs. That's when you back up the truck. 4. Accept the messy cycles or love the test. Expect cycles to be messy. We love to see testing because it helps the market sustain its overall bull trend. That's it for today, folks. Enjoy the roller coaster. Keep the bigger picture in mind and make decisions that you're going to be proud of in the next 1, 3, or 5 years. Stay calm and trade on.